What's up, everybody? This is a wild week. My portfolio was down $7,400. The CEO of Fedex said they see a global recession coming. Is now the time to panic? Am I going to sell my shares? Should investors sell their shares? Let's talk about it. If you haven't watched this channel, I'm Austin. I'm building a $1 million portfolio right here on YouTube and sharing every step of the way. The wins, the losses, everything. This is my portfolio. Right now, the current value is about $92,000. We were down $7,450 this week. And in total, since February 15th, 2022, I've put in $95,900. And again, we're down about $3,900. So hasn't been good. It's been tough. And here are the stocks I own. So this is this week. Everything was red except Tesla. Well, I don't even know why Tesla was up, but we've got Snowflake was down 2%, Rocket Lab down 10%, CrowdStrike down 10%, Meta down 13.5%, GitLab down 1%, Datadog down 9%, Tesla down or up 1%, The Trade Desk down 7%, Cloudflare down 11%, Mongo Database 18%, Bill.com 11%, Shopify down 3.5%, Airbnb down 3.8%, and Mercado Libre down 5%. All right, let's check it out. Here's the headlines, right? And there's an important lesson here. Stocks closed lower on Friday, extending sell-off for the worst week since June for the S&P and the NASDAQ. And here's the thing. Everything on here is negative. Everything's negative. Meta shares plunged 14%. Fedex CEO says he expects the economy to enter a worldwide recession. And so the lesson here is that these headlines are going to be about whichever way the market's moving. If the market's moving down, they're going to be negative. If the market's moving up, they're going to be positive because they need people to get clicks. I mean, I need people to watch these YouTube videos, so it's kind of the same thing, right? And so my point is not to give into this. You can read it if you want to, although I don't think you need to pay attention to this every day. Honestly, I think it makes returns worse. I think the best thing investors can do, long-term investors, is focus on their income, focus on their health, their families, and things outside of the market, and then getting more income over time so that they can invest more over time and just continuously invest. And let me show you exactly why I think as investors, long-term investors, we are better off just investing over time. This is a chart of the Dow since 1896. That's like 130 years almost. All of these things on here, this entire list right here, right here, right here, right here, right here. Every single one of these things are like major issues, major economic issues, natural disasters, wars, famine, pandemics, all of this stuff. And all that stuff is really bad. But they're all reasons, and they could be seen as reasons not to invest in the stock market, to be fearful. And look, there's been a lot of drops. This recovery took 19 years. This recovery took 25 years. This recovery took 16 years. This recovery took 6 years. But guess what? With all of these issues, the Dow is up 50,000%. And US GDP has grown by 118,000%. And those aren't typos. So I'm going to be a buyer of stocks with money that I don't need for the next 3 to 5 years. Any money I don't need for the next 3 to 5 years at least, I won't have that money invested. But other than that, I'm going to stay invested. And that's how I deal with volatility. And that's how I don't miss out. I'm not going to miss out on this type of gain potentially, or even if it's half that, who cares, over my lifetime and what I can pass on to my kids and things like that over time. I'm not going to pass up on that because I'm scared of what's going on. And let's talk about these recoveries, right? Yes, 19 years, long time. 25, 16, 6 years, that's a long time. But guess what? If you had money out of the market that you didn't need the next 5 years, obviously that helps, right? And then if you are continuing to invest during this time, sure, it takes 19 years to recover or 25 years to recover, but you're also going to buy here when it's lower and here when it's lower and here and here and here and all the way back up if you regularly invest. That's why I invest every month, and I share those transactions right here on YouTube, and I also share them actually real time. You can get real time email and text updates on Savvy Trader. I have my portfolio on here. There's a link down in the description below where you can actually subscribe to this and get email and text alerts anytime I make a transaction. So it comes straight to your phone and you don't have to wait for a video on YouTube or something like that. So what do I look at? What do you look at when the market is just crazy like this and it's going down every day? Well, I try to get to know the companies I own better, and I look for companies that I think are great opportunities to purchase and add to with the next purchases that I have coming to my portfolio. How do you do that? There's a number of different services. I like to use Seeking Alpha because it's got a ton of information and transcripts and all of that. And I actually have a link now down in the description where you can actually sign up for Seeking Alpha Premium for $99 instead of $240 or whatever it costs. So that link's down in the description if you want to try it out. But I mean, this is what I do. I've got my portfolios in here and I can see actual updates, and I ignore 90% of them because again, they're useless, but I can see actual updates that tell me and teach me more about the businesses that I own. So here's what happened this week while Rocket Lab was down 10%. They successfully launched their 30th Electron rocket and 150th satellite to space. Talk about a successful rocket. We just saw NASA and their Artemis project get delayed. Well, Rocket Lab, here we are, a little $2 billion company, has successfully launched its 30th Electron rocket, and they have a new rocket being released in the next few years, and they're entering into new markets. And this company is firing on all cylinders. They've got plenty of money, in my opinion. It's going to be a rocky ride, but I love owning this stock. And look, their business, they probably just earned more business by this successful launch because more customers are going to see that and sign up. What else happened with my companies? Well, Snowflake gets high marks from Needham as data is the new oil. So this analyst started coverage on the stock with a buy rating of 240, and the stock crashed 6% today or whatever. But what they're talking about here is a long-term view, right? They think the total addressable market is to reach 248 billion in 2026, and that data is the new oil. And it's actually a more critical asset to organizations today. Their products appeal to customers because of their ease of use and have helped the company get a jump on its competitors in a relatively young market. So this is to be taken with a grain of salt, right? This is just one analyst, but he's talking about a broader market. He's talking about through 2026, which is a lot better than focusing on the next 6 months or the next year even. Okay, and then we get this news from Tesla. They've improved their delivery cycle in China. So Tesla further improved turnaround time in China, making the expected delivery cycle for all models start at 1 week. Currently, the Shanghai plant only produces the Model 3 and Model Y, with the former offered in 2 versions and the latter in 3. The rear-wheel drive entry-level Model 3 now has an expected delivery time of 1 to 8 weeks, down from 6 to 10 weeks previously. And so there we go. I mean, that's going to enable them to sell a lot more cars. So we've talked about supply chain issues, and clearly, Tesla is doing something right where they're able to deliver cars quicker. And so look, these are just like news anecdotes, right? But these are the types of things I pay attention to that help me learn more about my companies, learn more about their businesses, and have confidence that these businesses aren't just dissolving. They're not going away. I think I own, real businesses with bright futures, and it's just a matter of managing your emotions and managing through this. The most important thing I'm paying attention to right now is keeping myself and my family healthy and not stressing too much, but also keeping my job or earning more income or helping my wife make sure that she's able to go to work and continue working. Those are the things I think we should double down on when there is economic fear. We're in a recession right now. I'm almost positive of it, not denying it. But recessions happen. They're a natural part of any economy, and we actually need them to continue having a functioning economy. That doesn't mean they're easy. That doesn't mean that people don't get hurt. They do. But we have to separate panicking over our investments and then the rest of our life on the outside, and still live a productive life that's not dominated by fear over our investments. At least that's how I invest. And you can see, jumping back to Savvy Trading, this is a cool thing. Again, if you check it out in the description, it also has all of my transaction history, right? So you can see, what have I been doing? I've been buying. I have not sold anything. I bought Shopify, deposited money this week, bought GitLab, bought Mongo Database, bought Bill.com, deposited money 2 weeks ago. And so there you go. That's what I'm doing. I'm putting my money where my mouth is and buying these companies that I already own and adding more.